Well, great. Let's talk corn for just a moment. By the way, we've got a couple of reports coming out in the morning. We'll get a World Ag Supply Demand Estimates report, a WASDE report. That's out at 8:30 Eastern. And then we'll get a WASDE, World Ag Supply Demand Estimate report. That's the July WASDE, which comes out on Friday, and we'll pick that up at 12 o'clock Eastern time. So corn market in the overnight session, we saw lower trade. You know, the corn market is really kind of under pressure right now. Is that maybe understating where we are? Yeah, the corn market has lost over 10% of its value so far. The December in the overnight session was down 2%. Let's go to soybeans as the bean market in the overnight session before we go to Brian Hoops. 4.5 lower, 10.13 a bushel. Now soy meal has been lower as well, but we turned things around in the overnight session. Soy oil has had really good gains, over 30% year to date, though lower in the overnight session. Quickly, we'll hit on wheat, hard red, and Chicago, 546.5, penny and a quarter lower. We look at the most active September contracts here. Now to that hard red down 2 at 520.5. And Brian Hoops, that cotton market in a little higher territory to start things in the overnight session. But wow, corn really taking it on the chin. Brian Hoops, Midwest Market Solutions. What do you think?
Hey, Tony, good morning. Yeah, corn new contract lows again overnight. Now, it seems like we've removed a lot of weather premium out of this market, and the reason is we're going to see about half of this nation's corn crop pollinated by about July the 20th, and weather forecasts out into that time frame suggest near like a greenhouse type effect. Wet conditions, very warm, things are really growing. A lot of producers reporting, things have never been better on their farm. You look at Iowa ratings, 86% good to excellent. That's the highest ratings for the state of Iowa since 1994. But then you go one state over, Illinois, our second biggest corn producing state behind Iowa, ratings are only about 56% good to excellent. They're a far cry from where they would be at a normal year, let alone on a record breaking type basis. So, there's still time, of course, for crops to improve, especially in the Eastern Corn Belt. I don't know that you're going to have a 188 or 189 yield when Illinois ratings are not very strong this year. That seems very unlikely. So you're more likely to see in that 180, 181 type range at this point. That's what the trend line is. That's what the trade is expecting USDA say on Friday's report. In fact, in this report, they've only raised yields 3 times. And the last time was 2003. So it's been quite some time since they raised yields in the July report. They've cut yields 6 different times. I don't look for them to cut it. Probably going to be more of a steady type go as far as yields go into Friday's supply and demand report. So maybe we'll see a little short covering developing just in case there's some surprises, but I don't look for a whole lot of change of trend in here with that weather keeping us on the defensive.
All right, so we're talking about markets that are under pressure, if you will, but let's come back and talk about markets hitting new record highs. That happened yesterday. We'll have more Market Day report after this. All right, let's talk all-time record highs. And it happened yesterday. Let's go to live cattle. This is how we settled out the session yesterday, 219.90. Look at that August contract, went to 220 and a quarter. We settled $4 higher. The October up 380 at 216.75. What about feeders? Well, if you can check the mark for all-time highs, yeah, just keep checking. August hit 319.45 and settled at 319.12, up $5.40. 567 higher on the September. October gained 587, November 597. And if you add the gains we've had in the first 2 days of this week, you're talking more than $10 on those contracts. Oh, that's pretty impressive. Let's throw hogs in here before we go back to Brian Hoops. Mixed day of trade. The August down 17, 106.92, but we saw a 17-cent gain on the October, 93.05. We really have to focus on cattle, though, here, Brian. Anytime we're checking that record high off means something big is happening.
Right. Yeah, Packers came back out of the 4th of July holiday needing to buy cattle for the next couple weeks. They need to increase their kills here. And cutout values have held in. The Packer margins are in the black. They've been that way for at least a week. And with higher cutout values, positive margins, they're going to pay up for the cash markets here in the next couple weeks. So we're looking for steady to higher cash trade. The futures market is anticipating it as well. And we're seeing all kinds of money flowing into the cattle and feeder cattle sector, especially after feeder cattle rallied to potential double top, testing those old highs on Monday. Once we broke above those highs, there was all kinds of buy stops and relentless buying interest coming into the market. So maybe we set back a little bit on the opening here this morning, but for the most part, this market wants to try and trade higher. The cash markets are still discount to the futures. That's a positive for the market, and will provide support if we do have any real dips in the futures market. That's going to be heavily bought. I'm thinking, especially some of those deferred contracts. It just doesn't make a lot of sense to be aggressively hedging out into the fall months at a big loss compared to where the cash markets are currently.
Okay, as we quickly wrap up our conversation here this morning. By the way, you can join us on Rural Radio, Sirius XM 147 this afternoon. Brian and I will continue the conversation, but quick look at the equities. What are you watching here?
Yeah, stock market's another one that's making some new highs, and it's continuing to push higher. Economic news has been largely positive. There's much more to like than to dislike, I think. The crude oil market's one that has had a little technical rally following, the big drop in prices a couple weeks ago. So we've tried to have a technical bounce in here. I'm not sure that we're going to be able to sustain that. I think we're going to head back lower just on increased supply. OPEC Plus is increasing supplies more than expected starting August the 1st.
Okay, Brian, as we head out the door here, by the way, that's Brian Hoops with Midwest Market Solutions. I'm not going to put you on the spot here, but here is a market that has been trading up 14% month over month. 51% gains year to date. What is it? Platinum, 1373, and that's where we start the morning and the trade, Tammy.